because sometimes you're not ready for the SBA. You're not ready for XM. And it's for the Regional Export Promotion Program, our REC program. We get into our REC members who get that rate. We have a number of people who don't understand what the export business plan is. There's no way they should be talking to XM at that point, unfortunately. Or SBA. We have to prepare them. That's why some crucial organizations such as the National DEC and the local DECs to have a conversation with these individuals. Get them ready. Be the mentors they need to get to that next level. And that's the only way for a successful relationship is going to work is with that partnership and collaboration. Not only, SBA, but also commercial service.
So, speaking from the loan side of SBA, implicit in our program is something called credit elsewhere. And it's a tough little question because it's basically asking for the name. But essentially, our terms, the terms of our loans, trade bank context, I'll often speak with lenders or even colleagues before joining. They say, well, why should I use the SBA loan? I think I can do it conventionally, and then the short answer is, well, then do it conventionally, right? That you're not there to use SBA. The overall program, and I pulled up some numbers just before coming in. Last year there were 54,000 SBA 51,000 SBA 7 loans, with over 36.6 billion in commitments, and then another almost 10,000 504 loans supporting upwards of $20 billion in projects. So compared to the overall conventional market, we are a sizable portion, but certainly not the lion's share. And the real reason I think that these programs get used is that the terms tend to be a little bit more flexible than what's available conventional. So again, if credit is strong enough, then go conventional by all means. There's fewer costs associated. Typically, the price is below an SBA loan. But for a lot of SMEs, the flexibility, the patient capital, maybe in the working capital context, higher advance rates, really are needed. And in the trade space, that a lot of banks that we work with tend to be more on the community and regional bank side. They're just not comfortable with international trade. And I look at part of our role supporting SME, part of it is also capacity. So, the hope is that whether you get traction or SBA, you get traction. And then ultimately, once you get a few of those deals done, it's a lot easier to understand how to work together. And I work with a bank, $6 billion in assets. We weren't doing anything too exotic. It was cross-border. That's about it, right? But once you get comfortable with it, once you understand how to program, the relative programs that are available, you can actually start building out your basic trade capacity. The conversation I always have is like, if you look backward 10 years and forward, you think international trade becomes more or less relevant, right? I mean, the supply chain is laid bare now in a way that people didn't understand, as intimately 2 years ago. People were asking me all about SWIFT, just 60 days ago, so it's finally the cool kid on the block. But what we've seen, and I mentioned there's no shortage of success stories at XM. I'm sure you're a part of them, and I'm sure many of you in the room were as well, but you see these exporters grow. I was talking with my former colleagues just earlier this week. There was a credit that was about $1 million SBA loan in 2006. Their combined credit lines are $60 million. In the commodity space, they're exporting, they're growing, selling all over the world. The credit will grow. We are a jump off point, a stepping stone, if you will, a catalyst. We're not here to build dependency. If anything, I want credits to move up. I want stronger balance sheets. I want them to get used to the trade credit insurance. And ultimately, the biggest success I think either of us can share is the day they stop using it, which is so counterintuitive from a program manager standpoint, but it's the truth, right? We want to break away, so to speak, as the companies grow. And if there was ever a need and an opportunity to come back, great, we're here to support you. But at the end of the day, the banks, let them get to those early stage companies. And for those who are in the credit space, we've all seen these deals, right? They come in, man, I wish they came back in a year. Like 2 years, just a little more seasoning, just a few more years under the belt. We all know at the same time that you don't get another bite of that apple typically. So why the SBA, why XM? I think it's that, right? It's not for the dude who wouldn't do a steal, it's just not quite there yet on a conventional basis, but hopefully our products open up the aperture to bring that company in, move them up, and then eventually move them off the program and onto the more conventional products.
I really like that. It's sort of the spectrum of, yeah, start with us, help get your credit up its place to be at, find your way to the world, and then continue on with the credit institutions that are out there. Tell me what's missing from that equation, though. So a lot of times we hear people say, hey, we don't know where to get financing from, or small business doesn't ever hear about it, or they do go to their community bank, and the community bank says, you want to put that where, I don't know where that on that, and then they end up lost in this, hey, somebody says, go call Wells Fargo or somebody, and then they end up, stuck in a quagmire. Give me, what's missing in that equation to help some of our potential exporters or small exporters out in the field actually make that financing connection?
Access to capital on a smaller scale. That is a huge problem that we all deal with. Everybody in the room, it seems, when somebody needs $50,000. We know the big banks they're not even going to touch $50,000 on the export loan. That ain't worth their actual time. So having some type of vehicle that we can actually make that available, and also making sure the companies are profitable when they actually go look for a loan. One of the conversations we have, I'm a $100,000 company. As soon as you get financials, you have $50,000 on the books. Because you write everything off, you have to have that level of transparency. The small businesses need to understand it. You might pay more taxes, we understand it, but that's the only way you'll be able to justify somebody making a financial decision based on what you actually get direct to the table.
Couldn't agree more. You only have one shot to make a first impression. One of the ways I think about it, and this is kind of from the context of being a director of a very tiny program in a relatively large agency. Put it in context, there's about $600 million of financing under our export programs compared to $50 billion in support in any given year. So I am the tallest short person in this room, and I look at this from the perspective. So again, I was saying 51,000 7A loans last year, over 10,000 filed 4 loans. We have probably close to 2,000 active lenders, or 5,000 lenders almost active under PPP. Again, grant program, not loan program. I think a lot of it actually has to do with kind of dispelling this myth that that exporters need export loans. Steve Sullivan, who I think is known to so many people here, and it's great. I got to come as +1, so I feel like he knows everybody in our economy guy. But it's really just think about the need, right? There's trade finance, which is a very specific type of product. It's actually SBA, conventional products, and supply chain program. But for a lot of SMEs, it's really just working capital and fixed asset finance. And in the capacity of what we can do for SMEs, it's make more of a connection between the working capital side of the bank and the small business side. Because small business financing tends to be very term-oriented. We like straight line, like amortizing loans and real estate and hard assets. I was at a SBA conference last week, NADEC conference, and I heard the line that just set me back, that working capital lines are unsecured. I was like, wait, what? They're not unsecured. But that's the perspective. So if we can find ways of broadly linking working capital, revolving credit to the small business side of the bank, I think we have a better likelihood of supporting export. The vast majority, I grew up in the Midwest, so the vast majority of export companies that I've been in the market, 10% exports, like we were talking about before. If you were 10% export, that's a lot, right? We're not trying to take that 10% exporter to 90%, we're trying to take the 10% exporter to 15%, right? And for a lot of these companies, exports represents a growth market. So these might be seasoned companies, they might be in their second or third generation of ownership. We were meeting with a exporter out of Milwaukee, third generation company, pretty well established, very seasoned. But he said, the third generation just came in, so the new blood's in there, and they said, look, we've been relatively flat for a long time. There's, they're in the food industry, they manufacture products for it. There's only so many restaurants, so many this, so many that. But they think our growth, the only way we can sustain growth, and if you're not growing in this economy, you're shrinking, right, is to start opening up other markets. We're looking to Latin America, we're looking to Europe. So that's kind of a broad approach, is to really try and dispel the idea that trade finance needs to be under this export program. Because like, think about it, within every bank. So you might have a small business team, you have an SBA team, there might be an international group. Like, the more layers you start putting on top of a credit, you're just raising the bar, right? All the people that have to get involved and work on it. If we can bring that further down, I think that'll have a positive impact in the long run.
And just to kind of add, for those of you who don't exit for a while, we did have a program along those lines, but it was a total disaster, I'll be quite honest with you. The default level in that program was, went through the roof. Now, keep in mind, this is a taxpayer dollars, so we can be good stewards of the money. So that's, if anybody wonders why we don't have that program any longer, that's the reason why.
Coming off of a pandemic and a lot of global trade issues, supply chains, challenging port crises, are you seeing more demand for your services at this point with regard to small and medium exporters, given that some of the credit may be weaker at this stage? Or has that shifted back now and people are finding the credit they need in the private sector?
Oh, it's funny you mentioned that. I had a conversation with David a little bit earlier, and he was saying that a lot of the larger private insurers are changing the regulatory policies. They're being a little more stringent, a little more cautious in regards to, the world events, the world we live in today. So, we have seen an increase over the last year of exit policy applications, and things are starting to turn around in that particular aspect, but we never know what's around the corner in today's society. A lot of people are not only thinking about themselves from, the aspect of what's happening from the geopolitical aspect, but also just their daily well-being. Going back to work is, think about going back to work. We go back to work 3 days a week now, 2 days off, after being out of the office for 2 solid years. So, the mindset of people is starting to change, and hopefully we'll start seeing some type of evolution where people can really feel settled and they can start doing the due diligence to start exporting more and realizing, as Dan was saying, if you're staying stagnant, you're not going at all. You're falling behind.
Yeah, so looking at loan numbers, fiscal 21 was a record year. Unlikely that it'll top it, but there's certainly a lot of uncertainty in the market. And I think the higher the uncertainty, the more that lenders will be looking to guarantee programs like SBRs. And a lot of times it's also the changing nature of how SMEs are buying, right? If you have manufacturers, one of my favorite lines is that just-in-time turned to just-in-case. So the idea that you're buying a larger inventory position to hold. So think about what that means. Say more of a mid-sized company, like they're going to have to hold more inventory, which means they're going to need a larger line, which means they're probably going to need to borrow more in the inventory, which conventional lines aren't great at supporting. So that is a place where the guarantee support can really help open up working capital capacity. Another kind of innovative use of, I think, both of our programs is that, from a financing perspective, the ability to support WIP at a pretty high level is unheard of in conventional financing almost, but then, pretty well supported under our programs. So like the idea of project financing, a lot of the deals that we've been seeing, they've been, relatively chunky deals. So you might have a $2 million company getting a $4 million order, and it's just hard to finance on that scale, even no matter how much you might love that company. Like, that's just a big order. So, that's another way that, that the programs are being used. From an insurance perspective, yeah, every time I have a conversation with whether it's a broker or an agent or someone at XM, it's always like my favorite conversation of the month, because it's like, well, where are we at now? And that's why I think having support for insurance, whether that's through XM or through private sector under our program, we're not preferencing, right? It's not like here it's XM and we're not supporting the private sector. Different companies are going to have different needs. Some companies are going to be better served by the private sector. Some early stage. I think XM's the best starting point. I certainly saw it with a lot of my clients. So giving them more options, I think, is really the best thing we can be doing is let the market figure out what the best fit is. Again, all of XM's policies are going through programs. All of all of it. I'd say the majority of those are going to be brokering other policies too. So.
Awesome, thanks guys. Aerek, I'm going to go to you on this, pivot a little bit. When I was at XM, we were blessed to have this new program on China Transformational Exports, the CTEP program. You guys have now rolled out a pretty cool Make It in America, Made in America was
Built better America.
yeah, program as well, which supports domestic financing so long as there's an export nexus.
Yes.
Those are two pretty, I would say, monumental shifts for XM into spaces that traditionally haven't maybe played it as much. One being geopolitically competing with the Chinese, which is pretty strategically called out. The second being an opportunity for us to literally change the game of the dynamics around how do we finance projects domestically that support exports and not just finance ports in other countries. Can you tell me, as you guys have thought about those two programs, what industry segments, what areas do you feel like will be supported by those? Are there particular areas where the XM team is sort of building out shops and focusing on those two programs supporting specific segments?
Well, I know advanced manufacturing is something we're really looking to try to be making sure that we're actually covering that segment, such as semiconductors, things of that nature. We want to make sure that things are built in America and give them the resources they need to build in America and be competitive. Because we all know a lot of people went overseas, but basically their factories are overseas, and they import back to the United States, add value, and then they actually export it out. What we want to do is start from where everything starts and finishes here, and then go overseas. Now, the previous administration as well was very instrumental in actually putting together that transformational program as well. So it's basically XM has to change. We have to be able to bring ourselves up to a different level of what's going on in the world. Because of the fact that, we just got a new website. If you guys have been on our website, we needed a new website for years. It looks like my teenage daughter might have built our previous website. Because and one of the things we've done, we've expanded our social media. We're on all forms of social media now. We're also doing to make sure we do a lot of videos. You see come up with excellent videos. Actually utilizing a lot of our actual clients to tell the story. I could talk about XM all day long, but if they're hearing somebody who's done it, how their business has grown, that is what's really going to make the difference in reaching some of these exports, and reaching some of these new programs, making sure we keep telling them what we need to be successful. Raising our hand, we need a small loan program. Somehow, some way, please give us one for our small business owners. They've asked us that question. We provide data and documentation along those lines. Of course, it's going to take a significant influx of funds to actually be able to do that. So that's something we constantly look for additional ways to actually evolve and really meet the needs of society. XM has been doing this pretty much the same way since its inception 87 years ago. Things are not how they were 87 years ago. So we have to do that, particularly to make sure we do change.
So just so I'm clear on that before you jump in, Daniel, I'm going to give an example. You tell me if I'm right on this. Okay. So when I was working there, we had a woman who owned a textile manufacturing facility in Maine, and she exported about 30% of her product overseas.
Darn tough.
What?
I think it was darn tough, wasn't it?
Yeah.
Okay.
I think that would be right. And specifically, she had asked if we could finance an expansion of her plant. Yeah. In Maine, and the answer we gave her was no at the time because we didn't have this Make It in America program. But the Chinese government was specifically funding development of plants that were competing directly with her for foreign tenders overseas, and so her ability to sell at a competitive price was basically diminished. Mm-hmm. So is that the type of opportunity that we're trying to support with this new program?
Absolutely. Making sure that we give people actually what they need in terms of export. They can get additional funding from us to expand so they can export. As long as they meet that nexus of what they're going to actually export, which she was meeting, and that might have been one of the examples used to push the program through.
Perfect. Thanks.
I'm actually really interested to see how this plays out because I'm on the same interagency panel my colleagues from XM, and there was a discussion, I think, clean tech and advanced manufacturing, and I just unfortunately had to rain on the parade and say that, look, I hate to break it to you, but $5 million isn't going to go very far, and that's our program cap. Even though we have the 504 program, which is my favorite program in SBA, realistically that's about 20. when you kind of figuring out your structures, it starts to tap out around 15, 16, and you can probably push it as far as 20. But when you really think about anything tied to semiconductors, advanced manufacturing, and even a lot of clean tech, it's really, really capital intensive. And, undoubtedly, the same way that XM is evolving, I'm sure, all agencies have evolved, SBA, not being, notwithstanding, that, it's the idea of what is small. And this is kind of my daily struggle. It's like, well, what is a small business, right? And I think it came up on the last panel, or the last session. And the reality is it's all relative, right? Like, it depends on what you're comparing yourself to. And, as real estate prices go, as manufacturing becomes more capital intensive, as automation, $5 million just doesn't go as far. So, like, at some point in time, like, I think the programs will continue to expand. The same way that XM is evolving, I think SBA will continue to evolve. And, I think there's a real opportunity in that because, from an SBA or a small business perspective, like, $5 million is just at the cost, right? Like, you can kind of see that. $5 million, it's a good amount, but it's not that much. Like, the middle market lenders are kind of looking at it, but not fully. But, like, at some point in time, you start to get more connection with the banks that might be working with those more of the mid-sized customers. The more connection we can bring between the international side of the house and the small business side of the house for those in the international departments, all of those small businesses have, whether it's payments opportunities, LCs, the whole rest, and like the more we can integrate that into our programs, I think that, and with the institutions, I think that frankly, the easier it is for SMEs to access, financing. So like I'm thrilled every new opportunity that comes up. And I guess one question I have is that program running direct or is that running through banks as intermediaries?
Well, banks and
Okay.
One thing also to add to that particular point that you asked about partnerships earlier. Recently, I believe in last month, we actually been partnered with the NBDA and actually mirrored our sales forces, where they have access to information in regards to possible people who are exporting and people who are needing exporting expertise from the NBDA side. We're working with their advanced manufacturing centers along with their export centers to kind of increase the synergy amongst just getting people excited about exporting and give them the knowledge they need to be successful. Because as you said, we constantly have to say things over and over again just to try to halfway get through. It's possible, And one of the easiest ways I explain export credit insurance is to the novice is I'll tell them that basically exporting with export credit insurance is like driving your car without car insurance. Can you do it? Absolutely. Are you taking a risk? Yes. So why not have export credit insurance? That's just like the dirtiest, cleanest way of saying, hey, this is why you need to do this.
Just to build on that, for those who've heard me say this already, like two of the things I'm not very tolerant of is like I don't need it and it costs too much, and it's like think about that. If you're saying it costs too much, there might be a reason for that. And I saw this from customers who howled when whether there was a buyer limit got cut or a buyer got dropped, and it's like, there are certainly situations where buyer limits get cut or, companies get dropped, but a lot of times it's actually because of the credit degradation on the other side. And I had I was working with a resin exporter in Tampa, and look, my margins are slim. I can't afford insurance. And like, your margins are slim. You can't afford not to have coverage because, at a 5% gross margin, you got to spend 20 deals to cover one bad one. And that's, that's a big concern. And, to the earlier point about, helping companies, get off of our products eventually, it's like, we see it where if you were to look at it, I think both XM and SBA programs are very flexible. And I think that they're very deferential to the bank to administer policies and provide financing. So it tends to be that our advance rates are a little bit higher than you can find conventionally. But now think about that. If all of a sudden we get a business maxing out advance rates on, say, inventory or receivables, we can use the SB or XM programs to not require insurance on the financing side. First off, we're building dependency because you're not going to find another bank to come in there with a 90% advance on AR, a 75% advance on inventory, and a pretty high reliance on uninsured receivables. So like, there's no way off. And we actually had a lender back out, basically close shop, and And, finding, there's no white knight to come in and rescue a credit who's over reliant on the support. Like, we have to be good stewards of both taxpayer dollars, but also policy that, like, I'm not here to enable bad behavior with my loan here. Just because our programs can support uninsured AR financing doesn't mean we're a substitute for insured trade insurance. And that's kind of the one area I probably struggle with the most is, I have to write one policy for 2,000 lenders in the country of varying skill levels. And, I in a lot of ways I come down on the line is if you have a policy for doing this, then follow that policy. If you don't have a policy for doing this, then it's required. Because if you don't have a policy on how you are administering credit enhancements or trade credit insurance or lending against letters of credit or whatever it is, you haven't thought it through enough to actually know when you should and shouldn't use it. So, that's not to get on a tangent of program management, but I just can't pass up an opportunity.
Love it. All right, I'm going to ask you guys one more question, and we'll open it up to the audience. This is sort of my favorite question, because I think uniquely in your seats, you get to see nationwide loans coming in the door, where they're coming from, where they're going, what segments, who's asking for them. If you were going into private business right now, which industry segments would you be going into? Where would you be exporting to? What countries are hot in your minds? What segments are hot? Kind of give me a sense of what you're seeing in terms of opportunity out there.
Oh, cybersecurity, absolutely. Utilizing services, relatively low risk versus that, as well as utilizing anything that had to do with the advanced manufacturing piece, security and financing. Those are the two things I would go to in part of the country. You gotta stick with Canada and Mexico. You're never gonna go wrong.
That's good. I've been in the legal sector so long, I have a hard time answering what sort of business I would go into. I think service is probably the sector that I see. I mean, the vast majority of our loans on the export side tend to be wholesale and manufacturing, as you would expect. But I think the service and digital industries, we are adapting our programs to be a little more holistic. And the reason I think that's important is, what is an export? I mean, I could poll a room and I'd probably come up with a couple different versions of what an export is. And I did this with my team and came up with 3, all applicable, but, slightly nuanced differences. And you think about digital exports, they're not constrained by supply chain. You're not, and this actually was an important discussion internally because the one thing that we had to do, and I think, probably both of our programs, almost started with this end goal of moving a container across a border and then work backwards into a loan program to do that. But what is a digital export? Where is it exported from? Is it where the server is? Is it where the cloud? Is it so really we're moving our definition to just the presence of the foreign buyer because I think that's the easiest thing I can get around. I'm not going to get in the middle of this service company or this international tourism company. I come from a trade financing space, so some of those industries don't typically fall within that sort of style. But generally speaking, I think there's a lot of advantages in a place where supply chain disruption can be a problem. But all of a sudden, you can access technology to deliver your product to the end buyer, free of any port interaction. I think that's a pretty decent spot.
Ports have gotten bad enough that you're just going to skip over the multi-dealer. Questions from the audience? Yeah?
I have a question for the ex-bank gentleman.
Yes.
I have a client in California right now. They want to export. They want to take advantage of the small business fees with ex-bank. But U.S. content is an issue. We're brainstorming the other day with the Department of Commerce personnel. How can we qualify a U.S. company? If they export, they can keep the business open. If they cannot export, they have to either minimize their staff or close because of the competition. They manufacture a product, they are forced to manufacture in China. Okay. But what we are trying to think, how can we get the US content to be about 51%? Their R&D is in the US. Their IP is US. Their staff is the best, their margin is huge. That means they can build a product in China for 20%, they can add 80% market. Could they qualify for an exit bank?
So basically, to make sure you're correct, they basically build a product in China, import it back to the United States, and then they will have to do this problem in terms of the R&D. Have you done a breakdown of what actually the R&D analysis?
They are in the process of doing that.
You need an analysis. I mean, that's something, if you can get it above 51% based on what you do from an American standpoint, that's fine. But that analysis needs to be done. We build a lot of customers who fall in that particular category, where once they get it back to the United States, they increase the value of the product, but using the American-made, whether it's packaging, whether it's the research and development, you say that actually go into that. So that leads them, never let anybody say they can't, just because they import it, it can't be exported back out until they do that analysis.
Now, can their margin be qualified towards the US content? Like, let's say they sell it for $100, their China cost is 20. Bringing for Chinese another 5%, let's say, 75% it includes everything else.
That's situational, so we need to take a look at maybe that analysis is correct. I can give a general yes or no, but that analysis is all to make a look at it. They're going to like keep in mind, the reason Exit does function is to create American jobs, and that 51% is something they're not going to move off of. You know, I know other countries, do their smoke and mirrors. If you pass through the country, you can actually use it as an export, but that's something that they're really steadfast on, is that 51%. And I know it costs us a lot of deals. We're on.
I'm going to comment on that too. You want to go first? I would be remiss if I didn't point this out, but I mean, this is really why there's two complaints with the SBA. So there are pros and cons to both of our programs, and I'd say this is an area that I think SBA is probably better positioned for. We're a little more agnostic with Small Business Administration. We're not in ECA necessarily. We really have great finance support. The same way that, as a lender, I use XM. We have a big international banking group that focus on basically U.S. subsidiaries for European companies, and we use XM all the time. Right? They would wait for personal guarantee. SBA, personal guarantee is the end all be all. And personal guarantee is our 51% confidence. So, and this is why I think from a lender perspective, advisor perspective, I think it's incumbent on both the business, the lender, and kind of the advisors to be educated on what's available in the marketplace, because it's not a one-size-fits-all. And there's a good chance, depending on the credit, that possibly an SBA facility could support that export opportunity. I mean, I look at maybe the most noble of all exports is the U.S. produced content selling abroad. Below that might be the Chinese produced but U.S. owned supported R&D is here. That's still an export. And this is why I think having product diversity is important, because while there's certainly overlap between programs, there are deals that fit better in one or the other. From a size perspective, I say about $5 million. The U.S. content being a differentiator, the waiver of guarantee being another strength of XM. I think it's incumbent to be realistic, to realize all the different products that are available to support that business.